I can't tell anybody else to do what I'm not willing to do myself. Would I be 100% into gold or silver? Well, on that part of my portfolio, frankly, yeah, I am. I mean, I have the real estate, which is where I live, not for speculation. This has not always been true, and I don't imagine that it's always going to be true. But there is not one little doubt in my mind about what's happening. Not even a fraction of a doubt. I don't care what it looks like. I know my research, and I don't go to, conspiracy sites. I go to the guys that are driving this bus. The International Monetary Fund, the Bank for International Settlements, the Federal Reserve, the European Central Bank, all of those places, the Bank of Canada. That's where I go to get most of my data. So if they're buying gold hand over fist, then why wouldn't you? Well, I mean, I think that it's the normalcy bias. And basically what we're asking people to do is realize that what they've believed their entire lives is a big lie. But I think everybody would agree that those that understand money the most are the central bankers. And if you look at what they're doing for themselves, then, that should tell you, because they are scared. Even if you look at, there's been a whole bunch of financial stability reports that have come out since the 15th of November, so over the last couple of weeks or so. And I haven't read one that said things are great. I've read a lot of caution in the central banks. So you don't have to believe me. That's why in my work, for those that haven't seen it, I give you the links. You go ahead, you check out where I'm pulling a lot of my work from. I mean, if I gave you everything I was reading, it'd be a book in itself every time. But I give you the links. Don't take my word for it, but don't take their talking heads on TV word for it either, because their job is to get you to stay in the markets. But the central bankers are buying gold hand over fist. That's got to tell you something. So don't believe me, but maybe you might. Don't believe what they say on TV, but believe what they're doing for themselves. My daddy always used to say, and I there's a part of me that always kind of hates telling this story because it makes him sound less than, but for me, he was the most wonderful man in the world, and it was such a gift. But he always used to say to me, do what I say and not what I do, because he was a really bad driver. He would back into everything. So he'd say, do what I say and not what I do. And I would always say to him, Daddy, that just doesn't make sense to me. But it trained me not to just listen to what they say. Oh yeah, everything is great. But look at what they're doing. They're buying gold hand over fist. I believe their actions. And when their actions do not support their words, I know they're lying. That's a simple one. And I hope everybody can really get that. Because by the time, people always want to know when. What's the exact moment that everything's going to collapse because then you're going to suddenly be able to get everything in place? No, it doesn't work like that. I can't tell you when exactly the moment is that you're going to know about it. But what I can tell you is when you do know about it, when the system collapses, it's too late to do anything. And I hate to say this, but I feel like we're getting pretty close. I'm seeing all of these kinds of behaviors that typically happen before a major crisis. I'm listening to what the central bankers are saying in their documentation, maybe not on TV, but in their documentation, and I'm watching negative rates. Come on. Do you really? People think that when somebody says, oh, this is free, there is no such thing as a free lunch. You're paying for it somewhere. Been to the grocery store, been to the doctor, trying to get an education. Those costs haven't gone down. They've gone up, and they're going to go up a whole lot more. And now they're starting to get us prepared for that inflation by overshooting their 2% target. What that means is their intention is for you to lose 2% a year in your purchasing power because you don't notice it then and you don't complain about it. But they, according to their data, they haven't even been able to hit that target. That's because of the debt overhang, because too much money is now having to go, whether individuals, corporations, or governments even. Too much of that income is having to go to service the current debt. Well, if the whole system is based on people being able to continuously take out debt, and you can't service all of the debt that you already have, it's going to put a crimp on your spending. And therefore, if there's not as much money chasing a finite number of goods, the prices don't go up as quickly as obviously the central bankers want them.
I mean, ultimately, I don't even think the president is really in control, ultimately, of where the train is going and how there's going to be a train wreck.
No, exactly. The power to do that was handed over in 1971 when Nixon closed the gold window. What that really means is that he handed over full power and control of inflation to central banks. That's who's in control. Well, that's who's been in control. That's the problem. They're now losing control because all the tools that they gave themselves to manage inflation, interest rates, and debt levels. Well, look, our Fed tried to raise rates, and what did they discover? Not going to happen, which is exactly the same thing that every single central bank since 2008, there is not one central bank that have attempted to raise rates have been able to do so. Not one. And we are no exception. Here you go. So, what do you do when you're anchored at zero or near zero? We've got what, 1.5 points? The average level where central banks have attempted to stimulate the economy, in other words, inspire borrowing, they drop the rates 5.5% to 5.75%. Well, what happens if we drop the rates 5.5% now? That means we're in negative territory, which is most likely why the IMF came out with a paper. I did a piece on it not that long ago on how to go deeply negative and get rid of cash and get you to volunteer the cash. Because while the cash does not preserve your purchasing power, it does, at least at this moment, protect your principal. Well, they can't have that. So they do need to take us cashless, but as they discovered when India did it, and it was such an aggressive move by the government that didn't work out so well.